You're welcome back to this training. In this episode, we are going to discuss chart of accounts. A chart of accounts is a systematic list of accounts used to classify, record, and report financial transactions in an organization's accounting system. It provides a framework for organizing financial data, tracking assets, liabilities, equity, revenues, and expenses, also preparing financial statements. A typical chart of accounts must include asset account, liability account, equity account, revenue account, and expenses account. The chart of accounts helps businesses to maintain accurate financial records, analyze financial performance, and making informed decisions. For the purpose of this training, we have a practical illustration to prepare these company's account. So now let me go back to our illustration. When you look at this question now, Xerox Building Solution started its business on 1st of January 2023, having the following statement of assets and liabilities. So now we have the non-current assets. Remember that assets are the financial resources owned and controlled by an organization. So now the assets can now be categorized into non-current assets, which is known to be the fixed assets, and the current assets. The non-current assets are held for not immediate consumption, but for further production of goods or services. So these are the non-current assets of Xerox Building Solution. We have the land and building, the plant, production machine, sealing machine, packaging, scaling machine. There is motor vehicles and furniture and equipment, while the costs of all these non-current assets are listed. Depreciation rates for each asset are given, while the accrued depreciation is also listed here. Remember that all our non-current assets, they are subjected to depreciation, that is reduction in the economic value of an asset as a result of wear, tears, usage, and passage of time. So now when I check this properly, from this illustration we have depreciation rates per annum, which is per year, then we have accrued depreciation. Looking at the question, the commencement date was on 1st of January 2023, but when we scroll down we can see that they are reporting as of 31st December 2024, which means that is 2 years interval. Are we there now? From January 1st 2023 to 31st of December 2024, making 2 years. So that is why we have accrued depreciation for 2 years, because since 5% rate of depreciation, when we multiply it with this 45 million, that should be 2,250,000. So now the accrued depreciation for 2 years will be 4.5 million naira. So now this is our practical illustration. Now let's go back to the QuickBook. So now we have seen the practical illustration for the purpose of this training, and the next step now is to set up our chart of account. So I'll move my mouse to this icon, chart of account, then I'll double click. All right, here is our charts of accounts. Remember that when we selected our industry, we chose manufacturing, and automatically QuickBook Accounting provided all these charts of accounts. But remember that we said we are going to modify our chart of accounts in order to suit this training. So here we are. Let's start chart of accounts. Let's go back to the illustration. As we can see that we have non-current assets. The first one is land and building, cost 45 million naira as at the time of acquisition, with depreciation rate of 5% per annum, while the accrued depreciation is 4.5 million naira after the second year. So let me go back to the QuickBook accounting, and we are going to create the first non-current asset. So I'll move my mouse to accounts, then I'll click that, then I'll click new, and you can use a shortcut which is Ctrl-N. So I'll click this. Now we have this interface. Choose one account type and click continue. Remember that land and building is fixed asset, non-current asset. So I'll select this fixed asset, then I'll click continue. Now the first thing that I have to create here is the net book value of that land and building. The net book value, if the cost as at January 1st 2023 was 45 million naira. So as at the date of reporting, what is the net book value? What is the value of that asset now after considering the accum depreciation? So I'll create land and building, land and building NBV, net book value. So what I have to do here is that I'll save and new. So I'll save and new. Then the next thing now is to set the land and building at cost. So I'll tap another land and building. So I'll jacket that cost. Then I'll close that, and it will now be a sub account for land and building NBV. Now can we see that? So I'll select this. Why the opening balance, which is the cost of that asset, is 45 million naira. So as at the date of reporting, which is the 31st of December 2024, then I'll save this and save and new. Okay, why the next one that we're going to consider will be accum depreciation. So I'll type accum depreciation. Okay, then for land and building, I'll jacket that for land and building. Okay, so then it will also be sub-account of NBV, sub-account of NBV. Why the opening accum is 4.5 million. Here is it, 4.5 million as at 31st of December 2024. So I'll go back to my QuickBook, then I'll type minus because it is accum depreciation. So I'll type minus 4.5 million, then 31st 12 2024. So okay, the date. So let me use this, 31st 12 2024. Okay, set. All right, so the date range, the date is formatted incorrect or is out of the range. Let me check that. That is 31st 12. Here is it. Okay, so now I will now save and close. Now when we check this chart of account, we have our land and building NBV, which is the net book value, to be 40,500,000 after we have considered our accum depreciation of 4.5 million naira, while land and building at cost was 45 million naira. So let's check our trial balance. Now here's our trial balance. Look at the trial balance. We have land and building at cost, which is 45 million naira, while the accum depreciation is 4.5 million naira. Let's check our balance sheet. Here is the balance sheet. Look at it. Fixed asset, land and building, net book value. Accum depreciation for land and building which is 4.5 million naira, land and building at cost 45 million naira, while the net book value of land and building is 40 million 500. Can you see that? So let's go back.